Okay, let's dive into this. Have you noticed how consumer finance feels like it's literally shifting right under our feet lately? In this explainer, we're looking at a true disruption trifecta. Basically, three undeniable events just happened this week, and they are fundamentally changing the financial world as we know it. We're going to break down exactly how a neobank, an AI giant, and a legacy brokerage are entirely rewriting the rules of the game.
So here is our roadmap for today. Number 1, scale, Nubank's global juggernaut. 2, behavior, OpenAI's finance feature. And 3, distribution, Schwab mainstreams crypto.
Act 1. Scale. Nubank's global juggernaut. To kick things off, we absolutely have to talk about Nubank's unstoppable momentum. They're out here doing their absolute best Thanos impression. Just inevitable, unstoppable, and collecting customers across Latin America like infinity stones. 135 million. I mean, let that sheer scale truly sink in for a second. That is their global customer base. The neobank that essentially ate Latin America is operating at a size that makes traditional growth metrics look, well, completely obsolete. And this brilliantly illustrates exactly why that scale matters so much. Nubank's efficiency ratio, which, if you don't know, measures just how incredibly lean the bank runs, hit a record low of 17.6%. Compare that to the average U.S. bank, which usually runs north of 55%. So they aren't just bigger, they are massively outperforming bloated legacy banks on a core operational level. This efficiency feeds right into their staggering Q1 2026 financial metrics. Look at this. Revenue crossed $5 billion for the first time ever. That's up from $3.4 billion just a year ago. Net income hit $871 million, climbing an impressive 56% year over year, and a return on equity of 29%. Plus, AI is deeply embedded in their whole operation now, pushing engineering throughput up 50% year over year and making testing cycles 90% faster. These numbers absolutely prove that Nubank isn't just growing into a great company anymore, it already is one. As CEO David Velas points out, quote, 2026 is an inflection year. And man, Q1 certainly made the undeniable case for that. This statement actually serves as a perfect thematic bridge. It's not just about the incredible financial success they're seeing right now. It signals the rapid, highly strategic geographic expansion that's currently underway. Breaking down this massive expansion, 115 million customers are in Brazil alone, making Nubank the largest private financial institution in the country. But the story is nowhere near over. Take Mexico. They just crossed 15 million customers and hit break even for the very first time, becoming the third largest financial institution in that entire market. Colombia is closing in on 5 million too. And to top the whole shebang off, a conditional U.S. banking charter was just approved back in January. The exact same formula that conquered Brazil is now printing elsewhere. Now, to be totally objective as we evaluate the whole picture, there is one watch item to note. Early-stage non-performing loans, or NPLs, ticked up a bit to 5.0%, up from 4.1% last quarter. Management notes that this is just seasonal, but, it's a reality worth monitoring, especially when you place it in the context of their massive 40% year-over-year credit portfolio growth. Act 2. Behavior. OpenAI as a feature. So while Nubank is disrupting through sheer global scale, OpenAI just walked into the personal finance party totally uninvited and immediately asked for everyone's passwords. The public reaction to this launch was frankly incredibly polarized, sparking an intense debate about data privacy versus convenience. Half the internet shouted, "Finally," while the other half nervously asked, "Wait, what sane person gives OpenAI their bank login?" And honestly, both reactions are entirely correct, but frankly, both are irrelevant to the outcome. The feature exists now, and the behavioral shift is already in motion. So the absolutely crucial point here is understanding exactly how this underlying tech works. Friday morning, OpenAI launched this personal finance experience inside ChatGPT for Pro subscribers, those paying $100 a month in the US. By acquiring the personal finance startup Hero, they've built a system that runs on GPT 5.5 and seamlessly connects to over 12,000 financial institutions. We're talking Chase, Robinhood, Amex, Capital One, all via Plaid. It generates a live dashboard of your spending, your portfolio performance, and your subscriptions. And with upcoming Intuit support that's going to unlock tax impact analysis and credit approval modeling, you literally just talk to it to manage your wealth. Wild, right? This brings us to a really critical concept, a Napster moment. By definition, that's a disruptive event that fundamentally changes user behavior and renders existing industry standards completely obsolete. And this is exactly what's happening to finance ops right now. I mean, think about every budgeting startup that ever raised a Series A on the promise of making finance simple. OpenAI just took that entire business model and built it as a super convenient product right in a sidebar. And hey, if you doubt the coming adoption, just consider this number, 200 million. That is how many people already ask ChatGPT financial questions every single month. To put that into perspective, OpenAI didn't just launch a standalone finance app. They made finance a feature within a tool people already use daily. The consumer behavior is inevitably going to follow this path of least resistance. Moving on to Act 3, distribution. Schwab mainstreams crypto. This is where the traditional brokerage, the one your dad probably uses, finally embraces direct spot Bitcoin and Ethereum trading. And Schwab is coming in extremely aggressively. They've rolled out Schwab Crypto with a trading fee of just 0.75% per trade. That neatly undercuts Fidelity at 1.00% and absolutely blows past crypto-native competitors like Coinbase, whose retail rates can sometimes hit up to 4.00%. And remember, we aren't talking about an ETF or futures product here. This is direct ownership, right inside the account your parents set up for you. Now, what's really interesting about this is the sheer volume of capital waiting in the wings. $12 trillion. Yep, trillion with a T. That is the amount of assets currently sitting across Schwab's 35 million retail accounts. By opening up direct crypto trading to a user base of that magnitude and undercutting on price, they're posing a massive distribution threat to the incumbents who simply cannot outbrand them. Neutrally mapping out the timeline here shows that the timing is absolutely no coincidence at all. On May 13th, the Schwab crypto rollout begins. That exact same week, the Clarity Act, which is the crypto regulatory framework Washington has been debating for years, cleared the Senate Banking Committee 15-9. Basically, Schwab is strategically waiting on regulatory clarity, and the environment finally delivered it to them. The absolute best way to understand this move is grounded in a simple analogy. Think Walmart doing grocery delivery. Schwab's entry into crypto isn't the flashiest version out there, but honestly, it doesn't need to be. It's an inescapable distribution event wrapped up in a highly trusted brand that's been around since 1971, giving ultimate convenience to 35 million people who already have a Schwab login. So, what does this all mean? We've just analyzed 3 seemingly disparate stories. A skyrocketing neobank in Latin America, an AI chatbot in Silicon Valley turning into a financial advisor, and a legacy brokerage opening the floodgates to crypto. So here are the core takeaways you should walk away with from our explainer today. First, Nubank proves that the neobank model can scale globally and incredibly efficiently, which is a huge threat to traditional banking operations. Second, OpenAI is fundamentally altering user behavior, turning complex personal finance into a simple chat feature. And third, Schwab is weaponizing its massive legacy distribution, giving millions of traditional investors a direct line to Bitcoin. But you know what the most fascinating part is? The market has not fully priced in any of these massive tectonic shifts yet. Which leaves us with this final, truly provocative question to ponder. Is traditional banking actually prepared for a world where AI and legacy brokerages own the future of distribution? It's a fundamental shift that challenges the very survival of standalone financial apps. Thank you so much for joining me for this explainer. I highly encourage you to dig deeper into the sources to see how this disruption trifecta continues to unfold.